Good afternoon, everybody. It's Scott Gillum with the ShadowTrader Stock and Options Room ShadowTrader Short. I'd like to have you reference Peter Reznicek's 26 May weekend review on his stock to watch, and that's Lululemon. Peter was talking about a butterfly that would take you into that 305, 310, 315 area for a small amount of debit to make about $5 worth of profit. Now, I like the stock, yet I want to take a look at another avenue to approach Lululemon. Let's take a look at that chart. Although we see the current price is down here quite low on a one gap, two gap basis since earnings, some buyers have found that there's value in around that 289, 290, 300 level and have moved price back up. This needs some more time to confirm, but it offers some sort of potential play. Obviously, the second gap lower has kind of gone through these Fibonacci's. We've gone from this Fibonacci swing low in October to one that was a high back in January. We've come all the way through it, back above, now back below that 100% retracement, and we now sit below this 120, negative 120 on the fib levels, which I find quite interesting. And the next level down is about 130, finding some support. I would say that you've got buyers pent up for potentially that move back, as Peter mentioned, around the 320, 325 level. With this high-end retailer, this apparel stock, buyers have become a little more discerning to the stock price value. So we've seen the first gap, the recovery, the second gap. Now do we get the third recovery? Earnings are coming up on the 6th of June, so we have to have this play come in before the June 6th time frame. There's a potential on that move into earnings, that's 2 weeks from now, of plus or minus 30 points. So if you take 30 to 300, you get about 335. 30 off of that 300, you get down to around 275. So here is my play. I'd like to sell credit above a 1 standard deviation expected move and sell credit below a 1 standard deviation move. Let's take a look at the option chart. We're using the May 31st time frame expiration. Here's your 1 standard deviation below the current price, around 290, 250. Here's 1 standard deviation above the current price at 312. Going a little bit on the bearish side, I'd like to sell the 290, buy the 295. Going above the 1 standard deviation, sell the 317.5. Cap that off with a risk of 322.5. I can put this trade on for around 61 cents of credit. And if I take a look at how that works out, if I have a 61 cent credit on a $440 $440 risk in this week. Oh, come on. Play games with me, please. $60 divided by 440. There we go. I'm going to get about a 14% return on my risk capital in less than 1 week's time. So once again, sell the 290, buy the 285 outside of 1 standard deviation. Sell the 317, buy the 322 outside of 1 standard deviation. Current price is a little bit wide. We've got a 42 by 80 cent bid to ask differential. In the middle is around 60 cents. This works out to a nice trade that if we look at the potential move back up and starting to close the gap in a week's time, we're not quite there on the expected move. And if we start to lose this level to the downside, this probably needs to be closed early as we get closer and closer to earnings. But there you go, Lululemon. Sell credit up, sell credit down, alternative to the butterfly trade. Hi there, I'm Scott Gillen from the ShadowTrader Squawk Box, and I want to thank you for watching this video. If you like this content, make sure you hit the like and subscribe buttons, and if you'd like to trade with me live every day in real time, check out ShadowTrader Squawk Box at shadowtrader.net/squawk or at the link in the description below. Good trading to you all, and I'll see you in the room.